Good morning and welcome to First Mover, your first global look at today's action in Bitcoin, blockchain, and digital assets. I'm Jen Sanasi here with my co-host, the Thai content director, Lawrence Leverton. Let's take a look at what's going on in the markets this morning, starting with Bitcoin. The CoinDesk Bitcoin price XBX index is at 30,108, down about 2% after touching 31K yesterday on some Fidelity rumors. We'll talk about those in just a bit. Let's see what's going on with Ether this morning. The Ether price ETX index is at 1,851, down about 1.5%. And DeFi assets, the DFX CoinDesk's DeFi index is down about 4%, sitting at 104. Good morning, Lawrence. Wonderful to see you this morning.
Good seeing you.
Well, we just took a look at the Bitcoin chart. Bitcoin touched $31,000 yesterday on some rumors that another TradFi company could be possibly filing for a spot Bitcoin ETF. That company is, of course, Fidelity. This is according to a report by The Block. It seems like every day another TradFi company is getting into ETFs. What do you make of this?
Well, okay, so Fidelity did have a previous filing that didn't go through with the SEC. So, even if they were to do this, everyone just calm down for a second. The other reason you should all calm down is yesterday we had the launch of the levered Bitcoin ETF, which went out, and it was meh. I mean, that's really what it was. It was about $4 million in volume yesterday. 4 million, not billion, million. It was the first futures ETF, Bitcoin ETF, that went out had about $1 billion in its first day or so, some crazy number like that. So this was kind of, granted, okay, it's a levered ETF, it's levered, it's like 2x levered, and the rules are. But I think, and this is me speaking personally. Maybe the excitement for an ETF is a little bit blown out of proportion. I think that this $30,000 level that we're seeing now, and that's where we are right now, at least. We got there from this ETF news last week with BlackRock, or a couple of weeks ago. But now that we're here, we have a lot of options that are expiring on Friday at the $30,000 level. So we're going to see a lot of buying and selling at Gamma to keep things there. The market makers trying to make sure they don't have too much exposure. So they're going to keep prices at about 30,000 at least until Friday. We'll see what happens after Friday. When those options are out. So stay tuned. But I don't know if this is necessarily a long-term play here.
Yeah, me speaking personally, I think part of the excitement comes from, maybe there could be a small regulatory win for the industry in the U.S., albeit it's a spot ETF that exists in many places around the world. And every time we talk about this, I have to say, Canada, we've had it. We've had it for a while. So we'll leave it there.
No one's breaking down your doors to get it, though. Just saying.
You're exactly right, Lawrence. Fidelity spokesperson told CoinDesk, quote, "We are not able to confirm or share an update." Let's get to our first guest. Hut 8 Mining has secured up to $50 million in loans from Coinbase Credit to fund its operations. Joining us now to discuss is the CEO of North American digital asset miner Hut 8, Jaime Leverton. Welcome to the show, Jaime.
Thanks so much for having me. Great to be here as always.
Great to have you here. $50 million credit facility from Coinbase Credit. What are your plans for the money?
Yeah, we're very happy to enter into this partnership with Coinbase. We see a ton of opportunity to continue to partner with them in the future. Clearly, a leader in this space, doing really great work for the industry in general. With respect to the loan itself, as you are aware, we're in the middle of a pending merger with USBTC, and there are some costs associated with that, which which part of the proceeds will be used for. And really just in general, we like to keep optionality with respect to our balance sheet. As you know, as we're one of the first to hold Bitcoin on our balance sheet and continue to have a very large stack of self-mined Bitcoin. And so again, we really like the optionality that this presents for us.
You just mentioned the merger there. What's the process in the merger with US Bitcoin Corp?
Yeah, so we're still undergoing regulatory approvals. We're quite a way through the process as we continue to disclose along the way. We're still going back and forth with the SEC, and then ultimately will require shareholder approval. But things continue to progress, and we're optimistic that we'll be able to get all approvals over the next few months.
So, looking at this latest acquisition overall, what's your total cost to acquire one Bitcoin? Roughly, what are your costs to do this?
Yeah, so you'd have to look at our last filings. It's not something that we disclose on a day-to-day basis, as I think everybody is aware. Tons of volatility in the market that impacts our price each day. And then, of course, we continue to track things purely as from a HUD 8 perspective, and USBTC has their own economics that are independent.
But nonetheless, I mean, on average, let's go with the last filing. What was it? I apologize, I didn't go through the 10K or the 10Q this past quarter, so you have to forgive me. But what was your average cost there?
I believe the average cost in US dollars was in the low 20s.
Low 20s.
Cost per mine.
And this acquisition is also they're also in that range, more or less, or higher, lower. What are your averages going to be post?
Again, I can't speak to that at this time, as much as I'm sure everybody would like me to.
And your average cost for energy here, what are you paying?
Yeah, so again, energy markets are very, very volatile. Obviously, a lot of curtailment happening, not just in North America, or not just in Canada, but we're seeing obviously the heat waves in Texas causing increased curtailment, which impacts the USBTC side. But I think one of the things that really differentiates us at HUD 8 and ultimately USBTC as well is a diversified model. So neither one of us entirely dependent on self-mining or prop mining. Both of us have diversified revenue streams, USBTC hosting, and then their managed infrastructure operations. And of course, for us here at HUD 8, we diversified last year with the purchase of our high performance computing business, which we continue to be very bullish on as things in the market continue to gain momentum around AI and ML, which is one of the reasons that we did diversify and purchase the 5 enterprise data centers across Canada, specifically to drive into some of that convergence narrative in HPC.
I know Jen's definitely going to ask you about the Canada situation there, but before we do, are you selling any crypto right now? Are you selling any Bitcoin right now in this market? Now that you're above 30,000, you're at profit.
Yeah, so we've been public and consistently selling monthly production. We release that data on a monthly basis with our production report. So we're doing ongoing selling of monthly production, but the stack continues to remain above 9,000.
Yeah, Jaime, as Lawrence mentioned, I have to ask you about what's going on in Canada. I remember at the end of last year, HUD 8 had to turn off 8,000 machines at its Ontario facility because of a dispute with Validus. Can you give us any updates on what's going on there?
Yes, we continue to be pursuing our dispute mechanisms with Validus. We did announce last week that we had moved a majority of the machines that had previously been in our North Bay facility they're moving down to a hosting partner in Texas. So excited to get the bulk of those machines back up and hashing over the next few weeks. Any indication as to why the dispute has gone on for so long? Look, I think these things are complicated. Obviously, there are a lot of external forces that have impacted the industry, not just in the mining side, but for power producers as well. And really, we continue to be public in our disclosures around the ongoing litigation. So I can't speak to it more than what we've publicly disclosed.
We showed you a shot earlier. Your stock has doubled in the past, the past year or so? It hasn't been so great for some other miners. Why is that? And what's the difference here?
Yeah, look, not all miners are created equally. I mean, we already touched on the fact that that Hut has a very unique diversification strategy, really being the first and only truly scaled digital asset miner that also has a robust high performance computing division. I think the other thing that we were really conscious about in the last bull market was making sure we continued to take a balance sheet first approach. We took very, very little leverage. We kept our stack unencumbered until this recent credit facility with Coinbase. And I think that's a key differentiator for us, both the diversification strategy as well as having such a robust balance sheet.
You're buying up some of these smaller miners. Do you see yourselves being an acquisition target?
Look, I think we continue to be in growth mode. We're one of the few publics that has successfully closed M&A on with respect to our HPC transaction last year, and obviously in progress with the US-BTC merger. I very much see us continuing to drive a growth trajectory, and I think we're uniquely positioned to do so with the strength of the business model that we've built.
Let's talk about that diversification for a moment. I know you have 5 data centers outside of your mining operations. How do you expect to grow that side of the business? What are some of your milestones when it comes to your diversification strategy?
Yeah, that's a business that we're super excited about. We closed that transaction end of January last year. Have really spent the past 12 months getting that business integrated, building out, really modernizing some of the offerings and the facilities, building out some new products that we think are really unique to this market that we play in. Really, in the intersection of blockchain and more traditional high performance compute. And then of course the demand profile and the unique requirements we're seeing come out of the AI startup community, I think we're really focused on. And I think we have a unique advantage by being scaled on both sides.
Yeah, Jaime, you and I are actually going to be on stage tomorrow at Collision talking about the intersection of blockchain and Web3. How is AI impacting the mining industry?
Yeah, I would say we're not seeing a direct impact in the mining industry in any meaningful way. Certainly AI is helping with speeding up some cycle times internally with different operations. I think it's really more about the demand profile that we're seeing continue to increase and evolve with respect to data centers and really GPU based scaled cloud or on demand type of workloads.
Do you think we'll see more AI in the mining industry?
I think we're going to continue to see convergence. I think one of the things that's really fascinating for me, we're named Hut 8. I think, as many people know, we're named after the hut where Alan Turing worked during World War II to ultimately help crack the Enigma code, and that cryptography work that he did formed the basis of what is now blockchain today. But then he went on in 1950 to write a paper really that set the foundation for AI as we're now seeing it evolve. He talked about I believe the name of the paper was Computing Machinery and Intelligence, and he prophesized that one day computer intelligence would be indistinguishable from human intelligence, and that kind of test was referred to as the Turing test, which we actually saw successfully occur a few weeks ago with ChatGPT. They were able to do a test where I believe it was therapists were giving advice to end users, as was ChatGPT, and the ChatGPT advice was 50% more acceptable by the end user than actually the human advice given. So it's fascinating that here we are as Hut 8, a company that's on the leading edge of this kind of convergence narrative between digital assets and HPC, and we're named after the man that really grandfathered the very early days of both of these industries.
Well, we hope we don't all get replaced by ChatGPT. Right?
That is certainly not something
anybody
I
in the
fear.
C-suite you plan on replacing with AI? Who should
Absolutely
be
not.
which employee should be nervous right now?
Nobody should be nervous. I think with the infrastructure that we're sitting on and the team that we have, I think everybody should be very, very excited.
All right. You sure the marketing guy?
The marketing guy is actually a marketing girl.
Same thing.
And I'm sure.
Jaime, thank you so much for joining us this morning. And I hope you don't replace any of the C-suite with AI, despite Lawrence's comment.
I want to be replaced by AI. I'm just going to chill out when I'm replaced.
One day.
I'm looking forward to it.
I'm not sure it's that easy, but thanks again for having me. I look forward to seeing you tomorrow.
Awesome. See you tomorrow, Jaime. That was the CEO of Hut 8, Jaime Leverton. Coming up, a crypto markets update after Bitcoin briefly hit the $31,000 mark in the last 24 hours.
Bitcoin broke briefly above $31,000 yesterday after the block reported that asset manager giant Fidelity is preparing to file a spot Bitcoin ETF. Or maybe they're planning, who knows, with no confirmation, at least from Fidelity. But what does that mean for the market? Well, joining us now to discuss is Maple Head of Growth and Capital Markets, Quinn Thompson. Welcome back, Quinn.
Hey guys, thanks for having me.
Yeah. Hey. So we see this ETF coming in. This another rumor of an ETF being filed. We saw the BlackRock iShares ETF filed, and a couple of others also too earlier. Wisdom Tree and the like. So, is this really long term is this real? Is this sustainable? Is this $30,000 level sustainable, or is this just hype?
Yeah, so I mean, the first Bitcoin ETF has been one of the most anticipated events in the industry for years, and so if you're in and around the space, you just cannot be underexposed or unexposed going into that potential approval. And now that you have 6+ of the major, asset managers managing almost $30 trillion across them, making these filings in the last 2 weeks, a positive outcome there is becoming increasingly, likely. And then on top of that, you've had tons of positive headlines over the last month. FTX estate recovering more assets, Celsius reorg, Core Scientific reorg, better miner earnings on the back of ordinals and lower power costs, and a lot of positivity flowing. So, even Jay Powell is adding fuel to the fire, with his positive comments on crypto and stablecoins.
Right. Nonetheless, we had this levered ETF come out yesterday, and it had, let's just say, kind of disappointing volume the first day. Does that give you any reason to say, you know what? Okay, so it happens. Then what? Is this a situation where you buy the rumor, sell the fact?
Yeah, that's a great question. I mean, leverage ETFs it's quite funny that gets approved before a spot. You're basically guaranteed to lose all your money if you hold a leveraged, particularly 2x leverage ETF over time. But I'm debating this question myself. You look at the first gold ETF, GLD, back approved in November of 2004. Gold did a 5x in the subsequent 7 years after that, and thinking that through a little bit, at the time, gold as an asset class was about 15% of total U.S. equities public market cap. Today, Bitcoin's $600 billion, which is about 5% of gold, but the U.S. stock market cap is about $45 trillion, and so Bitcoin today represents just over 1% of the total public U.S. equity market. And so if you think about what an ETF does in terms of giving that stamp of regulatory approval, ushering more and more of the large asset managers in by giving them a vehicle to hold the asset, I think there's a very strong case to be made that it's not a just one and done, and there should be consistent flows following that up that could lead to a sustained rally.
What are your predictions if the ETF gets approved?
Yeah, I think you continue to see the Bitcoin dominance rally. So that's something we've been talking about a lot in terms of the inflation story. It's important to remember Bitcoin and crypto is a global industry. About 80+% of the trading activity occurs outside of the U.S. And so among that, you have positive developments coming out of the UK, Switzerland, Japan, Hong Kong, Singapore, Dubai. Inflation in places like the UK remains problematic, and currencies rapidly devaluing in China and Japan. And so there's a lot of reasons, given it's such a global asset, that people would turn to this. And there's a need for a neutral store value, protection against monetary debasement. And so, I think we continue to see a little chop. The macro's been quite supportive, with tech equities going to all-time highs. But I'd expect outperformance from the crypto space, particularly Bitcoin, on the back end of the ETF approval, and things like the GBTC and Grayscale assets. You'd expect those to close up on the discount.
You brought up tech and tech stocks. We're seeing still some rising interest rates, obviously, from the Fed, and an attempt, at least, he might say nice things about Bitcoin, but he is definitely not a big fan of inflation, Jay Powell. So is this the Fed's attempt to throw water on the economy in many ways going to hurt the appetite for risk? Are we going to see people say, look, you know what, the interest rates are too high for me to lever and to buy and to borrow to buy Bitcoin and other things. I'm not going to play in that. I'm going to step back. Are we going to start seeing more people say, this is just too much for me to handle. I don't want to take this risk right now?
Yeah, I think it's something I'm watching very closely. I would say, the lowest hanging fruit on the inflation battle has been harvested. We've seen oil come down all the way into the 60s. The rest of the commodity complex has looked pretty weak. Copper and a lot of other inflation indicators, they're pointing to weakness ahead, or at least a reduction from the levels we're at, which are still too high for the Fed's what the Fed wants. So I think as long as the inflation numbers continue to trend in the way they're going, I don't think the Fed actually picks hiking back up. I think they might be paused here, with the caveat that if the commodity price environment stabilizes or kind of reverts higher, you might get some inflationary pressures alongside dollar weakness, which would be opposite of what happened in 2022, and therefore kind of import inflation into the U.S. So I think it's a time to be a little cautious. We should start to get some clues over the next few months here as some of these events get chopped through. But relative to those tech assets, I think if I'm going to bet on one, it's going to be crypto.
And Quinn, lastly, we took a look at the DeFi index at the top of the show. It's down about 4% today. What is your outlook on DeFi and altcoins amongst all of the celebration with Bitcoin?
Yeah, so on that Bitcoin dominance trend, on-chain activity remains in quite a bearish trend. You look at Ethereum, transactions and just across the ecosystem. There's still quite a few headwinds, I would say, for protocols and altcoins. So that Bitcoin dominance has run pretty strongly. Been talking about that since the beginning of the year, and so I'm not saying now's a great time to go long relative to alts. There's probably some mean reversion if Bitcoin does sustain a rally here. You're going to expect people to go further out the risk curve, but particularly on the back of an ETF and any sort of macro weakness in the second half of the year, you'd expect alts to maybe continue the weakness. And it's becoming more of a bifurcated story where it's not just all alts or Bitcoin. I think as the space develops, you want to focus on asset selection and make sure you're allocated appropriately, and it's not just kind of one size fits all.
Quinn, thank you very much for joining the show this morning.
Yeah, thanks for having me. Take care, guys.
That was Maple Head of Growth and Capital Markets, Quinn Thompson. We're going to take a short break, and when we come back, we'll be exploring Singapore, which was dubbed as one of CoinDesk's crypto hubs. Stick around. Good morning and welcome back to First Mover on CoinDesk TV. Singapore nabbed second place in CoinDesk's Crypto Hub rankings this year, which outlines the best places to live freely and work smart in the Web3 and blockchain space. Joining us now to discuss is the founder and CEO of staking access startup RockX, Zhuling Chen. Welcome to the show, Zhuling.
Hi, good morning, Jen. Thank you for having me. Hi, Lawrence.
Hey, good morning.
Thanks for taking the time to join us. This is your second crypto startup in Singapore. Talk to us about the environment in Singapore.
Yeah, so, actually Singapore has a long history of crypto, right? So even in 2016 and 17, there are already a couple of companies running crypto natively in Singapore. And if you look at the current situation in Singapore, I would say, first of all, the regulation side is still relatively free and supportive. And the government actually do not want to treat Singapore as a financial hub, but also take blockchain as a technology where you see a big community of NFTs. You also see DeFi. You see other types of layer one and other technology around crypto. So we really like this diversity of focuses in Singapore. And Singapore being a city nation, it's just so efficient to meet people and just exchange ideas and talk about collaborations.
Zhuling, TerRaForm Labs and 3AC were based in Singapore. How has the collapse of those two firms affected the environment? How has that affected how regulators are looking at crypto companies in the jurisdiction?
Yeah, so what happened last year was definitely unfortunate. I think it was an alert to everyone, both to the government and also to people that were embracing the innovations, but at the same time, now they really need to ask them about, okay, are we really doing our risk management right? So I think from last year, Singapore government has indeed trying to impose more risk management, especially on the retail side. And also the whole community is taking some time to heal the wound. But if you look at the general sentiment this year, I think people has already moved on, right? So people are building new things, but of course they have learned based on what happened last year.
Now we're looking in the U.S. at more regulation, or at least some regulatory crackdown by the Securities and Exchange Commission on exchanges, centralized exchanges. How is the approach of the United States different than how Singapore approaches and how the Monetary Authority of Singapore licenses things? If you could kind of give a big, broad brushstroke of all of this stuff.
Yeah. First of all, I think the big difference here is that the Singapore government is trying to give guidelines and licenses, but not taking enforcement yet, right? Of course, in between they have given some directives saying that, okay, no advertisements to the retail market, etc. But we do think that this is a quite constructive way of doing things. We know what is the rule, we play by the rule, and if there are any changes, we follow that. Whereas right now, I think in US, people are taken aback because there is a possibility that enforcement are taken without giving more directives or clear guidelines. From our perspective, we do think that, okay, we feel more clear and secure to operate business in Singapore right now.
We've seen crypto hubs really thrive where the builders are. What can you tell us about the developer communities in Singapore?
Yeah, so even in 2017, when I went to a Ethereum meetup in Singapore, we're already talking about 50 to 100 people, and even 200 people show up if Vitalik is around. And actually, right before taking this call, we were we are hosting the Polkadot Decoded event viewing party in Singapore, where over 50 people showed up. So Singapore does have a pretty big community, especially for the developer side, and we see a good mix of developers who are coming from TradFi, coming from internet companies, and also from security companies. Yeah, so this is something that we don't really see that big of a mix in 17 or 18. And of course, this also is a very positive sign of how the whole market has developed.
Why do you think that Singapore embraced Ethereum so early? That developers in Singapore took to Ethereum. What is it about either Ethereum or what is it about Singapore's development culture that led them to say, let's try this or that?
Mm-hmm. Yeah. So I think first of all, if you look at the early projects for Ethereum. So one of the early ones was in fact from Singapore. So that is DGX Global. So that project started in 2016. So did help to cultivate a huge community in Singapore. And Vitalik and some of the Ethereum Foundation guys used to spend a lot of time in Singapore because the Singapore government even invited them back in 17 and 18 to talk to the government, to talk to MAS, to educate them. So by having all those key people around Singapore for a long time, that does help a lot. And if you look at this ICO boom in 2017, Singapore was considered as one of the countries that has a clear regulation on ICOs. Hence, a lot of companies moved or considered having their legal entity in Singapore. So I think that is another boost for Singapore. Then during DeFi time, we also see that some of the pioneers were from Singapore, so that helped to even push the community to an even better place.
All right, Zhuling, we're going to have to leave it there. Thank you very much for taking the time to be with us this morning. That was the founder and CEO of RockX, Zhuling Chen. Don't miss our Twitter Spaces happening at 11 a.m. Eastern Time today on the top crypto hubs of 2023.
The State of Crypto is presented by Tron, connecting the world to the power of cryptocurrency.
Nevada's Financial Institutions Division announced on Tuesday that the regulator has filed to take over crypto custodian Prime Trust and freeze all of its businesses just days after Nevada's cease and desist order that alleged Prime Trust was near insolvency. Well, joining us now to discuss is CoinDesk Global Policy and Regulation Managing Editor Nick Day, who is also the editor of CoinDesk's absolute must-read State of Crypto newsletter. Good morning, Nick. Happy Wednesday.
Good morning.
So this filing from Nevada is this does not bode well for Prime Trust. I'm understating things, of course. This sounds like a certain kind of show.
It's pretty brutal. So yeah, as you said, Nevada's financial regulator filed to put Prime Trust into receivership, basically taking it over. This was done apparently with the consent of the Prime Trust Board of Directors. If you look at the filing, there are exhibits where the interim CEO, Jor Law, and the Board of Directors all signed off on, the receivership petition, basically saying, Prime Trust has a massive deficit. It owes some $80 million worth of fiat to customers that it does not appear to have. It has slightly better off in the crypto position. It only owes around 800,000 or so crypto that it does not appear to have access to. But some of the allegations are really quite serious. I think the big one is an allegation that Prime Trust lost access to customer wallets or wallets with customer funds. And it was never able to regain them. And it used customer fiat to buy cryptocurrencies to meet withdrawal requests while trying to regain access to its wallets, but has yet, so far been unable to do so.
Nick, tell us about these legacy wallets. What's going on there? The filing says that part of the shortfalls comes from them, like you just mentioned. Just tell us a little bit more about that.
Yeah, so what appears to have happened, the timeline is, in 2019, Prime Trust, under its original leadership, created came to an agreement with Fireblocks to take over, managing of wallets. This was migration from from Prime Trust wallets to Fireblocks wallets was completed in 2020. Prime Trust then came under new leadership, new management between 2020 and 2021. At the end of 2021, this new management tried to move funds from the Fireblocks wallets back to its legacy Prime Trust wallets, and in December discovered that they did not have access to some of those legacy wallets. This is according to both filing and a statement from Fireblocks. Yeah,
my God, how? How does this happen?
There are a couple details that obviously we still don't have, but these are, again, this is like wallet 101 stuff, from what I understand. I'm sure there's, stuff I'm missing. The filing only had so many details. The Fireblocks statement only had so many details, but Fireblocks did say in the statement that, anything it's managing is fine. People will have access to that. Prime Trust's current management, the receiver, whoever, they'll be able to access those funds. These are specifically Prime Trust's legacy wallets that are in this weird limbo.
Somebody wrote the keys down on a piece of paper, put it in their pants, and then accidentally washed them. That's going to be the excuse.
Yeah, that's the implication for sure.
Not saying I.
And it's also worth noting that Prime Trust's current leadership is not the same as the new management. So they're on like their third management team. What that means for this whole continuity is unclear, but it should be made clear that we're not talking about Prime Trust's current CEO or interim CEO and his team that made this decision.
All right, Nick, we'll be following this story closely, as I'm sure you will be. Thank you for joining us this morning. I'm Jen Sanazzi. Thank you for joining us this morning on First Mover. And thank you to my co-host, Lawrence Lewitton. Lawrence, we'll see you tomorrow. Same time, same place. Have a good day.